Wow, the market opened up red and it's staying red. Check it out. The S&P 500 down 1.86%. The Dow down 1.65%. NASDAQ down 2.26%. And the Russell 2000 down 2.6%. And this one stock is down almost 6.5%. But I'm wondering, could this be a buying opportunity? Get my trade alert notifications and watch my live trading sessions inside of my Simple Trading Room community. Come on over to discord.simpleoptiontrading.com. I'll see you over there. With so much red in the market today, I'm wondering if there's a buying opportunity here. And not necessarily for one particular stock, but for a group of stocks. I'm talking about an ETF, an exchange traded fund. And I'm specifically talking about the ProShares Ultra Pro QQQ, stock symbol TQQQ. Now, if you're not familiar with it, it's an exchange traded fund that provides 3 times leveraged exposure to a modified market cap weighted index tracking of the 100 largest non-financial firms listed on NASDAQ. Wow, that's a lot of words there, but the takeaway is to understand this. The 100 largest non-financial firms on NASDAQ are used as an index for this ETF. And the fact that it's triple leveraged means that if those stocks on NASDAQ go up 1%, this stock will go up 3%. So it's 3 times the leverage. But on the downside, if those stocks go down 1%, that means TQQQ goes down 3%. So as you can see, this ETF could have a pretty wild ride depending on how the NASDAQ goes. This ETF has net assets of over $20 billion and an average trading volume of 97 million shares. So it gets traded a lot, not only retail investors, but institutions. Now let's take a look at a daily chart going back to the beginning of 2021. So this ETF is up overall 49%. And as I zoom in, more recently you can see that since the beginning of 2012, this ETF has been having a hard ride and it's slowly going down. In fact, it's currently down 21% since the beginning of this year. So depending on what you believe, this may or may not be an opportunity to keep monitoring. For those of you that think the market's going into a spiral downwards and could potentially go into a crash this year, 2022, you probably want to avoid this since this is a triple leveraged stock. And if the NASDAQ goes down a lot, well, then this is 3 times the trouble. Or perhaps you're thinking like how I'm thinking, that yes, it is a dip, but I think in the long term, TQQQ will recover from this dip and start moving higher as the NASDAQ starts moving higher. So for me, I'm looking at this ETF as a possible opportunity to either sell a cash secure put or to buy a leaps option. I recently took a look at the option chain, and here's what I found out. Let me go over to TQQQ, which is the ProShares Ultra Pro Triple Q. And as I looked at the option chain for selling a cash secure put, basically 1 month out, so I'm going to go to February 18th. I like the $60 strike price, which is currently paying $3.68 per share. Let's plug it into my analyzer and see how the numbers work. So this is for ETF symbol TQQQ with the February 18th, 2022 expiration date. I like the $60 strike price, which at the current time is paying, let's check again, $3.65. $3.65 per share. Now with the February 18th expiration date, that would make the length of this put option 31 days. And with a $60 strike price, that means I need to reserve $6,000 as my collateral, and that's in case the option contract gets exercised, which if it does get exercised, I'll end up paying $60 per share, which is a discount of $6.85 off the current market price, and that represents a savings of 10.25%. Now for selling this cash secure put and having the option contract get filled, I'll receive a premium payment of $365, and that'll show up as a credit deposited immediately into my trading account once this option contract gets filled. And that $365, that represents a gain of just over 6% for this 4-week or 1-month option contract. Now, if you're familiar with my channel and what I'm looking for, one of the things I always try to check and get is 1% per week for each week that the option contract is open. And so in this case, the length of the option contract is 4 weeks. And so at a minimum, I want to get a premium payment that would pay me 4%. And in this case, it's just over 6%. So this trade gets a green light and meets my minimum criteria. But if the collateral requirements are too large for selling this put option, I could always use a Leaps option to make money without owning the shares. Here are the results from a Leaps option I just closed. This is a 39-day trade where I netted $1,200, and that's a return on my investment of 29.2%. You can get immediate access to my trade alert notifications by joining my Simple Trading Room community. Be sure to use the special link that I've included in the description below so you can join in on the action. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and/or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.